do in this video is combine the vertical chart, the high-low close bar chart, with the point and figure. This is something that really is a lost art, and people, I don't think they do it, or they'll do it on a higher time frame. But I guess you could use it with a point figure, or I don't know. There are some benefits to it though. In the Wyckoff method, the figure is point figure chart is used to identify ranges where there's consolidation. And by consolidation, I mean really what's going on is accumulation or distribution in those ranges. And there's methods where you can. Anyway, let me just start. First of all, this is educational purposes only. It's for my education purposes only, and trade at your own risk. Right? Okay, so what you see here, I'll start going over the bar chart first, and then connect it with the figure chart. Right? So as the market goes lower, get rid of all of this. Right. Where is the okay? As the market goes lower, it starts going sideways here. Okay, see this? I'm at the lower chart. This is the Dow chart, Dow futures, and you see this start moving sideways, right? Does that mean it's bullish? No, but typically when price moves sideways like this, it's possible that there's something going on. You don't know, but I think the figure chart will give you insight into it. So I'm going to mark this area with a box. Okay, so now we see the bars in this range. Now let's take a look on the figure chart as what is going on in this range. So now I'm at the top chart here, and we're going to examine this. First of all, we see price has gone into this range on heavy volume, and it looks bearish, right? As price goes sideways, you see heavy volume. Goes to the next one, heavy volume, right? And these are on the up waves, but we also notice that these up waves are very small. Okay, so that there's stuff that happens here. Okay, um, first of all, remember that smart money always buys highs and sells lows. It's just their nature. That's what they do. Okay, so what you see here is the upwave, the minor upwave here stops after high volume. Minor upwave stops after high volume, only one, 10 or 100, well, whatever, but very low amount traded above there. So that means that this is resistance. Why? Because it's stopping. Okay, like if you go over here, this is where it was identified that the market is going to break down. Why? Because this starts the move right here, the 1600, and even though it stopped, it broke these lows. So it's basically a breakout bar. Okay, the rest is consolidation. So moves have a tendency to start and end on high volume. And if there's something in the middle that has high volume, it's usually because they took out a level. Again, bars start on high volume, end on high volume, and if there's volume in the middle, it's usually because a level's been broken. Okay, this is on a very minor scale. It is Smart money, for example, will buy here, at the beginning of a move. At the end of the move, you'll have high volume as well. So in the beginning of the move, you'll have high volume. At the end of the move, you'll have high volume because there's a transfer. Buy low, sell high, and buy low is always on high volume. Anything significant is always on high volume. Buy low on high volume, sell high on high volume. Because you have to transfer the inventory. Anyway, I think I got a little diverted. But anyway, coming back down, we see that this range formed. Alright, so you have this range forming, and there's a high volume here. And there's no follow through. High volume, no follow through. What the hell is going on? So this is almost like saying there's resistance, because these guys sold, so it went down. It comes up to the level they like. They're gonna sell some more. That's what they're gonna do. Okay. So then what happened is you have the market broke and then totally went in the other direction. Now, does that mean that the interpretation of this high volume, that it was bearish, is incorrect? It could be, but there's so many factors involved, because what really happened was once they did this spring over here on the higher time frame, it was a real spring of a major area. That's what caused that entire move up. This entire move is a result of a spring at a former level. Okay, but in general, what you'll see is break on high volume, or starting the pressure on high volume, ending the pressure on high volume. When it pulls back, the high volume also identifies support or resistance. Okay. Anyway, so as we can clearly see, there is a sideways base, then there's a spring of this minor range, and then you have this. Now again, I can't catch them all, but right here, the 1200 means that the breakout is on high volume. Okay, but what's even more important is this. Okay, there's something about small ranges with high volume that entices me, because it's like small ranges would identify lack of activity, meaning not too many people involved. And it's like they quietly do things in these small ranges, you know. So this small range here, look at 1900 contracts, there's something going on. So this right here, let's see which bar. Now you look at the lower time frame, it has to do with this bar. So they're quietly doing their absorption here. It's like, or they're slowly doing it, or quietly, whatever. Okay, so this right here is absorbing the supply. How do I know? I know because these guys are like, we're getting an opportunity to sell. Okay, let's sell. So they're selling, and the buyers are absorbing the supply coming off of this area. Okay, there will definitely be sell orders against this area. These guys are selling in, and where is my, yeah, and this is the absorption that is occurring, where these buyers are absorbing these sellers. Okay, here is a level, in this area where selling pressure is coming in, and there's a transfer, sellers to buyers, and buyers take it up. Now, all of these different things, these are different variables that need to be coordinated in your mind. Now, can any indicator do this? It's not possible. This can only be done is based off of experience. The indicators can give you facts, but you have to kind of creatively use those facts. You know, you have to creatively use those facts to decipher what's going on. Like it turned out that this was a possible accumulation or failure on the part of the sellers. Their high volume was taken out, which means they're done, man. They're gonna cover as soon as they get tagged. If they sold this level, they want out. All right. So after that, you had price. Over here, this high volume here is telling you that that this move is coming. Because in my opinion, that is the effort reward, meaning someone's holding the bag there, and it's also absorption of this area, meaning they're selling, and this guy's like, okay, 1900 contracts, thank you, in between this range, let me buy, let me buy, let me buy. And then it breaks out. Now price goes back down, and this is another concept that needs to be uh, understood. Is when price comes here, who's trapped? The sellers are trapped. So don't you think that if they're trapped, they're going to cover their position? And wouldn't that covering cause a rally? That's what's going on. The the price has gone down to test this level and bounces off this level. Look at this level. The price is 99. Alright, see the price here. The high is 99. The low here is 00. Oh no, the low is 99. So it tests that exact level to the tick, because in my opinion this is caused by short covering, because this may have been distribution or accumulation. I think it was possible redistribution, but when it went down here, the buyers off the higher time frame smacked the lower time frame traders and just took it higher. But this is actually spring from a prior level. If you look at right here, see, watch right there. This is what they did, you know. So this spring came and just total takeover. Anyway, so what has happened now is we have an indication that there was a spring absorbing had high. Look at right that bar. I'm gonna try to. It's this bar. Alright, let's get rid of this. And that bar equates to the point figure, so let's get this button over there. Copy the button. Paste the button. Okay. See that? There you go. That bar that heavy volume in that area equates to this bar. Now you can see like it's highlighted on both charts, right? So you see, now in that bar was the warning that we're going higher. Price is going higher. In that bar, it was evident. Price is going higher. And guess what it does? It goes higher. Okay, even this pressure is actually coming off of this area, but I'm not gonna go into all of that. But we know that, you know, the pressure came, and it came down to this level. Now watch this. Now it goes down here, the shorts cover, and we're trying to figure out whether to buy or not, right? So what happens is this bar occurs. Okay, this bar occurs. So let's mark this bar. Now let's take a look at the point and figure equivalent of this bar. Okay. That wide ranging bar that's highlighted in like a very light white or blue color is equates to this. Okay, that green. Now take a look at that ease of movement here in this bar, and take a look at its corresponding point figure. Look, 1,800 contracts traded on the reversal. Okay, 1,800 contracts. Someone's buying. You know, there was selling like in this ease of movement bar also. You have to be aware of that, like right here. 1 second. So there was selling. In this ease of movement bar, right? This ease of movement, there was 1,900. So obviously there's going to be some type of reaction, right? But I want to go long. You want to know why? Because in this entire wave, there were 14,000 contracts traded, which means whoever sold the 15,000 here, they got out on the 14,000 up. Okay, so these are all the indication you have to hold in your head. You know, like, oh, okay, 15,000 down, then only 4,000 is shortening of the thrust. Reversed by 14,000 up, these 15,000 covered out. Okay, and it's taken out their high. 15,000, the high has been taken out, so they're out. They're out of the market. Anyway, so here, we're taking a look at this ease of movement bar here, and then, okay, now what? As I'm going over the ease of movement bar, look at the chart highlighter at this screen. Look here, you have 18,000. So isn't that an indication of continuation, that price is continuing higher? Okay, you've had your rally, you've had your reaction. Now what do we know? We know price is ready to continue higher. This is an indication of continuation on strength based off of 1,800 contracts just traded in that level, and then 1,500 later, but whatever. So why not buy the pullback, right? Let's get in. Let's get in. So once that happens, and it comes back to that area, which happens on this bar, this is also interesting because this bar is going to scare people, but let's examine this bar. Alright, this bar here that looks so scary, right? It would be a big red bar. Where's the volume on it? Do you see anything? Look, I'm going to have the bar highlighted. Now take a look at the point figure. Do you see any really strong reversal volume? No. In fact, when I highlight this, this bar is equal to these two, and it actually has low volume. You see that? So this big scary bar that looks like an ease of movement bar goes down, but look again at the top chart. Look at the blue histogram that's shaded. Where's the volume? Then look at the bar itself. Where's the volume? Where's the pressure? Where's the heavy selling? It's not there. In fact, when the next bar that reverses, this white bar here actually has 1,400 contracts traded. You see the 14 here? I'm going to highlight that. Right there. Right? Now we go to its bar chart equivalent. This thing has 1,400 contracts. 1,400 contracts. Okay, so there's good ease of decent ease of movement, but the volume is present. They're buying on the up wave. And then eventually over here you have 2,200 contracts down, but you know, at first I thought maybe yeah they had a shot because there's a lot of volume, but it goes up and the price just does not have um, any type of follow through, meaning it can't, meaning the breakout buyers that came in, they did not get a following, and actually the one after the this right here is nothing. So look look at this. Look at this. There's no juice. So they couldn't attract the following on this bar. It broke out but immediately reversed. So anyway, price goes back, selling, and again a range forms. When they start forming these ranges, remember, like the range, sideways ranges are very important. Okay, not only on bar chart but on point figure, they are very important. Okay, and then what I've found is not only is the range. Hold on. Anyway, so not only is, you know, when they start moving sideways like this, it's the volume in the ranges that is that, in my opinion, tips you off. Because if they're really accumulating or distributing in a range, wouldn't there be a volume print that is high? Like, how do you know a range has any accumulation? Would you know? Let me show you. Yeah. Let's go to paint. Yeah. 1 second. I'm probably screwing things up here. Oh, what is this Cortana? What the hell is Cortana? Alright, alright. Anyway, so when price starts going in a range, right? Whatever range, like people assume that this is important. But how would you know? Wouldn't it be more important if you had high volume in this range? High volume in that range? Wouldn't that be so much more important than just seeing price go sideways? Obviously, because that would mean that they're doing something in this range. That smart money is actually doing something in the range. Otherwise, a range is a range. Like, who gives a shit? It goes sideways. Good for it. Maybe they're doing nothing. But this is important. So now price is selling and it stopped. It starts moving into that range. And all of a sudden you see volume pick up, caught, indicator catches it, 1,400 contracts in a tight range, another 1,400 contracts in a tight range, back to back. Okay, they're selling, it goes to zero. Alright? Zero. Okay, and now ding 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 ding, right hand side of the range. It was selling, goes to zero, starts moving sideways, you know, after the pullback, and then this. So I know that they are being active. And on the bar charts, what look what's happening. Ease of movement. So like bar charts are good for ease of movement, you know, like So this is the reaccumulation, but it was for a very small move. But again, move's a move. And in this sideways range, we get the following bullish indications. The first, ease of movement. Okay, same thing again. We got here was ease of movement. Same thing again. We got here ease of movement. See that those bars. So the bars in the bar chart will show you clear ease of movement. I've designed them so that I can filter and only see what's relevant, like given the price volume behavior, trend behavior, blah blah blah. Anyway, so we see ease of movement. On the figure chart, we see that ease of movement, either in it or around it, there is heavy volume. Okay? Heavy volume around ease of movement. Ease of movement identified on the bar chart. Heavy volume on a bar level within a certain price range identified in the point figure chart. And then they basically run it up right to resistance. Okay, this is when they were getting ready, and form that hinge, and then doink, right to resistance. What happens at resistance? Unable to go through. But the attempt to resistance was known, in my opinion, by these guys here, the pullback buyers, who did whatever they could in order to get something. And then when it went to resistance, sellers were like, gonna sell, bang, 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 bang. So that's when it encountered pressure. So the right hand side here told you that I'm gonna at least try to go up one more time. And when it did that, it couldn't go through. So sellers came in and did that. And I know why. Like, you would know in advance also, because it was near the end of the day. So, like, end of the day, Friday, do you think this is gonna break out? Obviously not. So, then this right here, so they sold or took profits, one of the two. And then again, something's going on here. I don't know what's going on here, because it's like, it's 250 or something like that, and I don't want to consider any of this price action after it goes to resistance, like think into too much, because over here it looks bearish. It looks really bearish because there's all this volume. It's unable to go higher. It's all at a weird angle, meaning there's a lack of ease of movement. There's no ease of movement in this wave. But think about it, like, it's end of day Friday. Are you how much of a move do you expect to get at 250 in the afternoon on the Friday? Like, so after that, I just don't want to consider it. But later on, like, we'll see where the moves were here, where put high volume around what? Around ease of movement, like right there, you have high volume on the bar chart, and no. You have ease of movement on the bar chart and high volume on the figure chart. You have ease of movement again on the bar chart, high volume on the figure chart. You have again ease of movement on the bar chart and high volume on the figure chart. So it's like, it's telling you they're going up with ease of movement and strong buying, in buying as indicated by the high volume, okay, and the base building or whatever right here. This is a minor one. This was absorption. It's telling you here, when the absorption occurred, that it's absorption and there is good amount of buying, because you don't want to just see like this example shows selling, but there's no high volume. There's no real damage because I don't know. They just couldn't attract the following on the way down. So it's just meaningful when price move. Wyckoff's when Wyckoff talked about price, he said a lot of times it attracts a following. It attracts a following, meaning price goes only up or down as much as it attracts a following. Well, how do you know it's attracting a following? It has to be through volume. It has to be through volume and sometimes time as well, because from the perspective of time, if it continues for a time to continue higher, then as long as that during that time it must have been attracting following. But the volume here is very clear. In 1800, it was the following, that it got 22 or 15, etc., etc. Anyway, this was um, just just how to coordinate the point and figure chart with a bar chart. Remember, like you look at those bases, the volume in those bases, and when you look at ease of movement, you want to see volume around that ease of movement. Okay, where's that ease of movement will be identified very easily on the bar chart, and its volume will be identified on a point and figure chart. The base preceding it will be identified on the point and figure chart as well. Um, and the ranges actually can be seen on both point and figure as well as bar chart, but I think the bar chart makes it more exaggerated, so you'll see the range of accumulation, you know and then from that point, like when you have an idea, you can actually start taking counts. It doesn't mean it's going to reach that count, but a lot of times, sometimes it does, sometimes it doesn't. It's just a guesstimate, but it is a method, just like Fibonacci extension will give you a method or whatever. All right, that's all, folks.